Hey traders, Andrew here from Epic Markets, and in this video we're going to be going through and looking at how to trade trend line bounces. Now, of course, before we go any further, make sure that you smash the like button. It helps us no end with the YouTube algorithm, and make sure that people just like you get to watch videos just like this to help them become a better trader. Now, also make sure that you're subscribed to the channel. You can do that by clicking the subscribe button underneath this video right now, and click the little notification bell so that we can notify you each time that we release a new video to help you become a better trader. So let's dive right on in and take a look at these trend line bounces. First of all, you really need to understand what a trend line actually is and what the goal is with a trend line in order to make money. So zooming out of the charts a little bit here, I'm on the euro against the US dollar on a 4-hour chart. I really wouldn't go any lower than a 4-hour chart to trade trend line bounces, because with the noise from the smaller time frames, the volatility, you're just going to get chopped around something wicked. So stick with the higher time frames like 4-hour and above, and you'll find life a lot easier. The next thing is, you're probably going to have more losses than wins. So as a result, we need to have big winning trades. We're going to be looking at 3-to-1 reward to risk trades on each and every signal. So a trend line, it starts off in the bottom left and moves up towards the top right in an upward trend. So looking at this here as a perfect example, we start at the bottom left, here's touch 2, here's touch 3, we bounce, we get a move, fantastic. And in a downward trend, rather than being underneath, in a downward trend we see trend lines on top of price. So here we can see, if I just zoom out a little bit, this overall downward trend. Let's just start at the very, very top. And this is probably the line of best fit where we have touch 1, touch 2, touch 3, touch 4, and so on. So this is the overall downward trend through here. And right now, it's very fair to say that we're chopping around and going sideways. So let's focus on upward trends first of all, work out exactly how to draw them, when to draw them, and let's also make sure that you know exactly when to execute those trades. So zooming in here, I'm going to start at the very bottom of the moves. We've got a move down through here, and we're going up through here, and I'm not even looking what's happened next. I'm working off of this low point at the bottom. Now at the time, and let's zoom right in so I can't see exactly what happens next. This is the situation that I'm in. I have price at the absolute low point. Price moves up, pulls back, starts to move away again. This looks a lot like touch 1 and touch 2. And then we see price move down through the trend line, which invalidates it. So now this trend line is no more. And what we need to see is price move up so that we have a touch 1 and a touch 2. So now it's moved up, we've got ourselves the very beginning, and we've got ourselves this touch 2, and now we're waiting for price to come back down again and hit this trend line. Now, the way that I personally draw trend lines is to start at the absolute low or the absolute high, depends on obviously upward trend versus downward trend. So in upward trend case, start at the absolute low. And then I draw it through the bodies of the candles. So you see here right now, it's auto snapped to the low. I'm going to just adjust it to the body of the candle. The reason why I do that is you'll tend to find that these diagonal lines, these trend lines are areas, they're zones, and they're not going to get respected absolutely perfectly. So as a line of best fit, working off of the bodies of the candles tends to give you better quality trend line bounces from touch 2 onwards. So start with the absolute low or absolute high, then go through the bodies of the candles. And now here we see we've got price coming down, breaking through this trend line. So again, this is no longer a valid setup. It's broken down through the trend line. It's no good. So we get rid of it. And we need to see price move back up again above this high before we see any kind of a trend line again. So there we go. So now we're working with touch 1 through the low would put us here, and also rather conveniently ties in with the body of the candle here and here. This is definitely the best location for this to be. We don't want to be drawing trend lines on the bottom of that candle down there, because you can see where it really bounced was here, and this was very likely a stop hunt or news very likely that took out the stops before it rallied higher. So I'm working through the bodies of the candles here, which is the line of best fit. So touch 1, touch 2, we're waiting for price to pull back down to this trend line. So up, up and away, moving back down again slowly but surely. Now we're starting to get really interested. So what we want to see, and let's just clarify exactly where we are right now. We have got absolute low point. We've attempted to have bounces here, which haven't happened because the trend lines got broken. We've got our second touch here. We've pulled back down again into the trend line. We are still not yet buying. We need to see buyers actually turn up at this trend line. So I won't do anything until I see the candle change color from bearish to bullish, which has just happened. So now what we're going to do at this point is enter above the candle and stop loss to the lowest low of the last 3 candles. So let's just draw this on so that you can easily see. So let's just, in fact, let's just do this, much easier. Let's just right click, buy stop, and a stop loss. And the risk, let's just make this a bit bigger so you can see. There we go. The risk is around 25 pips, 24 pips. And we'll do exactly the same thing with the take profit, but we're going to go 3 to 1. So 25, let's call that, times 3 is going to be 75 pips. So 3 to 1 reward to risk is around here. So we've got our stop loss, our entry level, and our take profit. And we have our order here. And let's just make this really stand out for you. So I've made it hot pink so it stands out on the screen. We've been triggered into the position and now we're letting the trade run. Now this is a 4-hour chart, so spread, commissions, really kind of irrelevant at this point. The stop on this is 25 pips. The spread on euro is like 0.2, 0.1, 0 half the time. So commissions are something you're not even going to be thinking about either. It's such a small amount compared to the entire size of the stop loss. So as price is moving through here now, we're in the position. We're doing nothing else until this trade hits target, unless we change trend. So still going, shoots up, hits your target, you get your 3 to 1. Now you're waiting for your next trade setup. Now this leaves us with a bit of a, should we say, a challenge, because we've got this touch here, we've got this touch here. Do we work off the bodies of this candle or the body of this candle? And that's where we're going to have to work out what it looks like as a line of best fit. So working off of this body here still seems to suit this area here. And so that's the level that we're going to work off. The body of the candle. The body of the candle still touching, works well. Now, trend lines, unfortunately, are going to be a little bit ambiguous like this. There's going to be an element of, should we say, figuring out the trend line, which a computer just can't do. And that's not a bad thing. Now, as we pull up to this level here, we get ourselves a nice pin bar here. So we're going to be entering with a stop loss underneath. So 13 pips, we're looking to make 39. 3 times our risk. We get triggered into the trade, and kasplat, it's gone. Now that's fine. A 3-to-1 followed by a loser, we can live with that. We expect to have losing trades, and when we're going for 3-to-1 reward to risk winners, we're not expecting to have a 70% success rate. Anyone that tells you that you're going to win 3, 4, 5-to-1 winners with a 70% success rate is lying to you. All right, so let's just get rid of that trend line now. We've done this move to the upside, and now if I just zoom it out a little bit, this is what we've just traded through here. Let's just add these arrows on. So we took a position here, and we took a position up the top here. And now we are around here somewhere. So at this point now, we've broken all the trend lines that we could possibly draw through here. It's pushed aggressively down. Even if I draw a trend line here now, it's still broken down through that off this absolute low, which I mentioned. We don't want to work with absolute lows because of stop hunts and things like that. You can get slight different tails on candles on different brokers because we all have different liquidity providers. So working with the body is a lot better. Now, that's our entry 1. That's our entry 2. 1 win, 1 loss, fine. But now what we've got is we've got the beginnings of a downward trend. We've got high, lower high, low, lower low, lower low. This is good for downward trend. So we start at the absolute high. Bearing in mind right now we're still in this trade. We don't know we're going to be going down yet. At this point here, now we've got the lower high. We've got the lower low. We've started at the absolute peak. And what do I need to do here? Work with the body of the candle rather than the absolute top. So carrying on through there, we're looking for price to come back up to this trend line, and we're looking for buyers to become sellers, or a pin bar or something that really makes us want to sell. Here. So now we've got this lovely reversal candle. The body's a little bit bigger than I'd like, but this is a ringed high pattern. Now, ringed highs are a fantastic setup, and a ringed high is where we have a higher high and a higher low. And I love ringed highs and ringed lows. They're just amazing to trade. So we've touched the trend line. We've got ourselves a ringed high, high, higher high, low, higher low. We're going to be selling underneath that low now. So let's just do a sell order and make sure it's in the right position. Stop loss. Now, the stop loss wants to be the highest high of the last 3 candles. So the high of this candle here versus the high of this candle here, I'm going to stick it safely behind that one, because if I was a large institution or if I was a market maker and I had the ability in the short term to move the market, I would want to take out this high because I know that's where a lot of people are going to have their stops. And that's the reason why I'll put it just a little bit safer behind there. So 21 pip target, 21 pip stop loss gives us a 63 pip target at 3-to-1 reward to risk. We're still not in the trade. Now we're in the position. We've been stopped out. So we've had 1 win, 1 loss, 2 losses. We've pulled up and we've reversed. So this is really interesting. Look at how we've reversed here. We've just taken out that high, which is what I said. If I was a market maker, I would look to take those highs out. So from there, you can see how it's been taken out and been stopped out. That's probably going to run to the downside quite significantly now because of that stop hunt. And there's a double-legged pullback. There's a lot of reasons why that looks particularly good. So this is going to be a trade. Now, why am I saying this hasn't invalidated the trend line yet? We haven't seen what I'd call a clean candle above. It's gone up and shot straight back down again. Now, I'm on a 4-hour chart. If I drop this onto an 8-hour chart now, which I can do in our platform, then this would be a pin bar. Straight up, straight down, that's just going to be a pin bar. Okay, opening here, closing here. In fact, let's just do it so you can see. See exactly where I am. Look, there's the pin bar that I talked about. Okay, that's just a pin bar over those 2 candles. So we'll go back to the 4-hour chart. Go back to where we were. And that's the reason why, to me, this looks particularly good. It's taken out these highs. Anyone that was short has just been stopped. If I'm a market maker, an institution, a bank, that's a great place to get short. And it's very likely where they are getting short. Plus, if I just adjust this ever so slightly, you can see that this does neatly become that third touch. Remember that this is a line of best fit. It's not always going to be completely accurate. That's the reason we have to go over those big 3-to-1 winners. So we're going to get short underneath here. Let's just place ourselves at short order. Stop loss up above the high there. Risk in 25 pips. Looking to make 75 pips. You're in the position. It's going the right direction. Look at how that sells off oh so quickly from that stop hunt there. Still moving down. Tries to rally higher. And I would adjust this trend line a little bit now to here. I'd have both this one and this one, but we're not going to take any more shorts until this trade concludes. So we're in the position still in the position, and it's down here, questionable as to whether you hit target. I know what on Euro USD, I don't know what time that was, 5, yeah, you probably did hit target there. But let's say the spread was a tiny bit higher, you wouldn't have hit target there, you'd have actually hit target here. Okay, but you definitely got there in the end, which is the important thing. So that trend line's now been dealt with. And what we've had so far is a 3-to-1 winner and a loss. And a loss and a 3-to-1 winner. Now this is faffed around, granted, but it's still got there. So 2 wins, 2 losses. But when the wins are 3-to-1, we can stomach those losses. Okay, so at this point, we're now working with both this trend line and this trend line, which does complicate things a little bit, I grant you. So I'll draw them both in to make it a little bit easier to understand. Again, I'm working with this as a line of best fit. I don't know where the price is actually going to react to this. Now, we only hit target over here. So at that point over here, down when we hit target, this line's been completely obliterated. So we can get rid of that completely, because the price has gone straight to that line that I just deleted. The next one, though, this is still valid. Look, see how we have touch, touch. We're looking for the next bounce where sellers show that they're in control. So the buyers are coming up, up, up. We wait until sellers take control, which happens here. And now we move back down again. Now, to be fair, we're not going to be shorting this because we'd have been in this trade. But there you go. So we've been in that trade, we've made some money, we're happy, we're waiting for the next trade set up. This line is still valid, but now we've got this line and we've got this one. Okay, so we've not taken any more trades through here because we were still in this trade. And now we're working off of both this trend line, touch, 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 okay, and also this trend line up here. And you'll see what happens here is as we bounce off here, move down, we get this pin bar form, which is a perfect example of a high quality trade setup. And we get that wonderful 3-to-1 reward to risk trade. I shouldn't really need to draw this out, but that's only a 2-to-1. Let's just explain this. So I've drawn a Fibonacci retracement here, but by doing that, I've actually got the reward to risk. So this is a 1-to-1, a 2-to-1, and a 3-to-1. We hit 3-to-1 down here. Fantastic. Just clear that up. And we're still keeping both these trend lines in place. Okay. We're waiting for price to come back up again, ping here or ping here. Now, this is rather unfortunate, but we're not going to be shorting this one. The candle's gigantic. You're never going to make any money if you short a candle that size. It's going to have to move 1,000,000 miles to make any money. So there's no trade there. Here, though, this is now a trade setup. We're back up on this trend line that keeps being respected again and again and potentially again. We're going to be shorting because it's a downward trend. Entry underneath the candle. Stop loss just above, not the little inside bar, above this one here. Risk of 15 pips. We're looking for 45 as a 3-to-1. Haven't been triggered into the trade. Still looking to move down. Look, sellers are in control. We have actually moved through this trend line now, though. Okay, so just get rid of the order. We're not in the position yet. The lower that candle was 9.2, 492. Oh, we did. We actually got triggered. I tell a lie. So we got triggered into that position. So let's draw that on. So the reason why I know we got triggered here, it doesn't look it, but we did. The low of this particular candle, the bearish white one, is 356, and then the low of the one next to it is 355. Okay, so 0.1 of a pip. This candle has broken the low here. So technically, we are in the position with a 45 pip take profit. Still moving around, still in the position. And we hit target for our 3-to-1 off of that trade set up there. Okay. And now we're waiting for price to move away and move back and give us a nice small reversal candle at this trend line or potentially up here. You see how these are just big engulfing candle, not interested. No seller candle, not interested. Wish that I was. And then off we go. Now, I can't see everything on this chart. This is zoomed in quite a lot for you guys watching on cell phones. If I just zoom out a little bit here, okay, so I can see what I'm working with. I might now have to reevaluate starting with the very top of this move. So let's just get rid of those trend lines and look at where we are right now. So we've had that move down. At this point here, we would still very much be interested in anything bouncing off of here. There's also a smaller trend line through here. Okay. Now, the reason I'm having to get a bit more granular with this is because we've moved so far from the high now, and we're aggressively moving down faster, that as the trend picks up and gets more momentum to the downside, we're not going to have a curved trend line. Okay, so we have to work with more recent highs and work with the more recent lines of best fit. So these are our two lines right now. So we have this short-term move through here, this trend line. And the reason I've got it here is because of that. And we're bouncing off of it, bouncing off of it. That's really where it ought to be in the short term. And then the longer term one here. So we're up. We've had a reversal candle here. I'm going to be looking to get short with a stop loss above the high here. Risking around 25 pips again. Looking for 75 pips or so. Don't get triggered into the trade. Gives us a tiny little inside pin bar. That's fine. The risk is, still pretty much 3-to-1 there. We're in the position. We're in the position. We're in the position. We've hit target. Great. Now again, because we've had a little bit of movement here, I'm going to readjust it to the more recent data. The older stuff, yes, it's still important. Yes, we're still bouncing off of it. But what's happening now is going to affect price more. So this was a great little trade to the downside. 3-to-1 reward to risk winner. So again, we've got this another touch, next touch. We're looking for price, and this could be really interesting, actually. If we are getting even more aggressive movements to the downside, this becomes incredibly exciting. So you can see I've got 3 trend lines now, because if we do move lower, big if, but if we do move lower, it's this short-term trend line that's being used as short-term resistance. We've got this level of support here becoming resistance. This could very easily be a 3-to-1 move down. So we're looking at our next short trade and entry underneath this candle. Let's just steal that and move it down. It'd be much easier if we just sell, stop. We're looking for around a 66 pip take profit, 3-to-1. We're in the position and we get stopped out. Fine, that's going to happen. We have a losing trade. That trend line's been broken, invalidated. Get rid of it. And now we have this longer term one. Touch, 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 touch. We're going to be entering underneath. Stop loss above this high. giving us around a 31, 32 pip stop for a 90, 95 pip take profit. We don't get triggered, and you can see here how the candle, the lows are moving up. We've definitely broken this trend line. No longer interested. We haven't lost any money. It's just moved up and away. And so now we've really got the longer term trend line. So this one here got broken. Okay, we broke through that one. Bearing in mind we're working off the bodies of the candles. It broke through, moved away. That's no good. Right now, we haven't really got anything to work from apart from this big long term one. We're moving up to it. We break through it. All of a sudden, trend lines are broken. And let's just put some kind of a box here just so I know exactly where I am. All right, zoom out a little bit. Okay, so this is the little box that I just drew, and I just said down the bottom there, I didn't know exactly what's going to happen next, but that to me is where all the trend lines are broken, and look at what's happened. From here, we've then moved back up again quite convincingly. And we would be looking for trades to the upside through here. So, start with the absolute low. Touch one, touch two. At the time, what do we see? It gets to the trend line, doesn't give us a reversal candle, so we're not interested. We discount this as being touch two, and now we assume that this is touch two. Moves away, great. When it pulls back and touches, we are looking for a reversal candle formation, which is sellers becoming buyers. Right now, right, so here's the thing, look, see? We've got the bodies of the candles. It's pulled back down. It's broken through. This doesn't exactly excite me at present. If you look, let's just make sure that it is on the absolute low. And we look at the trend line here. You will see, drawing it on the absolute low, we have technically got price here. So this one is a little bit of a grey area. But technically, if you worked off the absolute low point, it would still be interesting. Otherwise, you may see this as having broken through the trend line and being irrelevant. But we have, for the most part, still got major higher lows. So technically still upward trend. You could definitely go either way with this. You could skip it or you could take it. If you took it, entry, stop. It's only an 8 pip stop. It's tiny. So 24 pip take profit. Oh, and you did hit target. I think that was an element of luck more than judgment perhaps on that one. Because it just does turn around again there. But again, that one could easily have been taken either way, left or taken. And obviously with a 3-1 winner, that just happened to work out quite nicely there. Very small candle too. So if I ignore this last one here, which is a bit of a question mark, and look at the rest of them, which we've walked through step by step, we've had this first one here, which has moved 3-1. Fantastic. Let's just, where's it gone? Where's the little tick and cross gone? Doesn't know it. So we had this one here, which has gone 3-1, fantastic, followed by a loser. So after +3 and -1, we are at +2. We have a loser, so +2 becomes +1, and then we get this 3-1 winner. So we've gone 3, -1, -1, +3. 3 and 3 and 6, take away the 2 losses, we're +4 right now. Next one, obvious +3, we're +7. Next one, also a +3. We're +10 right now. Next one, also a +3. We're +13. And then we have this last little loser at the end here, which puts us back to +12. And of course, we skipped over this one because it may or may not have been a trade. But if you did take it, you're +15. Now, this is just me looking at the Euro USD over a few months. August, September, October. So not a huge amount of time. And on the Euro USD, 3 months, you've made 12%. That's 4% a month on the Euro USD. Now you could be doing a similar thing, for example, on gold or the NASDAQ or the Dow. And just taking some examples here, short term right now, trend line, touch 1, body touch 2, touch 3, there's your 3 to 1. I might want to zoom right in so you can see it. Touch 1, touch 2, pulls down, reversal candle, there's your entry, buying. Stop's going to go underneath the low. Your risk on that trade is, well, that's because I've got it set to 10 lots there, but 85 pips or 859 pips, 8 threes, 24, 9 threes, 27, so it's going to be around here as I take profit, which it gets to. So fantastic reward to risk there. 3 to 1, hits target, boom, done. Wait for the next trade setup. And don't trade 10 lots on gold because that's quite a chunk of money. Okay, so that's looking at gold there, just short term here right now. Remember, this stuff works really, really well in trending markets, obviously, but it also works really, really well on the higher time frames, 4-hour charts. You don't want to be looking for trend lines in this little mess through here. The market must clearly be moving up or clearly be moving down. Otherwise, you're just going to watch your account disappear. So again, from the very top, we have touch 1, touch 2, waiting for touch 3. And we bounce lower, we bounce lower, we bounce lower, we break through. When we break through here, fair enough, fine. There's no trade set up. Even on the absolute high here, we still don't get this trade set up. Now, that's absolutely fine. Here's your high point. Here's your reversal candle. Way too big. We don't get anything out of that trade. It's a shame, but we don't get anything. Body of candle. You may well have got into this one, which would have given you the 3 to 1 reward to risk. And you can see when it cleanly breaks through, no longer interested. We've also broken through every single trend line we can possibly draw. Maybe take this last one, which loses. But you only need 1 3 to 1 through there, which covers any loss that you take at the end of the trend. Look at it through here. And this is the reason why I tend to use lines of best fit rather than absolute lows. But absolute low, body, you can see here we've pulled back down again. This is so aggressive, a trend line, and it's the absolute bottom of a monstrous move. It's not really the ideal starting point. And these lows can be different on different brokers. So on our platform versus somebody else's, it could be a slightly different low purely because of different providers, different LPs. So whenever you see a monstrous move like that, it's best to ignore it as a starting point and work with actually what you can see that was a more normal price action. So we have touch 1, touch 2. You might get in here. If you've got on the pin bar, maybe a 3 to 1. Failing that, touch, touch. You may have got here, stop down. Okay, that's going to happen sometimes. Here we don't break the highs. That's no good. Here we just break through a trend line again. No good. Here we have touch 1, touch 2. Pulls back down. Might get into this one. Might get into one of these for the last little move. Now, again, you're not looking for these little 1 to 1 reward to risk trades. We're looking for 3 to 1s here. So you've got to make sure that you've got an obvious trend going up, and really it should stand out off the page. Okay, so if you're here trying to do trend lines this aggressively, it's never going to work out. All right, but touch 1, touch 2, touch 3, there's your 3 to 1. You maybe even got touch 4 here for a 3 to 1. And if you work off the slightly more conservative lows over here, obviously it doesn't work out. However, as we continue throughout that trend, as we do go up and we do break through these highs, we have a low point, a move up, a move down, we get in for the next 3 to 1. And ultimately, that's what this is all about, is making sure that we can identify these trend lines, that we can spot them on the chart, spot the reversals at the trend lines, and look for those moves in the direction of the trend. Now, you could always choose to add an extra filter if you wanted to alongside these trend lines. You may decide that you want to add something like a stochastic. And if we add a stochastic on, let's say, an 833, let's make this easier colors to see. Let's go with blue and red. Okay. So touch 1, touch 2, touch 3. If you wait here for the stochastic to turn over, move up, that's going to give you the entry, and you can even use it as an exit potentially all the way up here. However, just sticking with a 3-to-1 take profit is a lot easier. So, but you can use the stochastic for sure as a way to get into the market in the direction of the trend. If you found this guy over here based off of this trend line, not quite perfect. I wouldn't trade that. Let's 1, 2. Here's the next one. Lovely pin bar off of that. And this stochastic here is not great because it's such a tight pullback, but you get you 3-to-1 anyway. And towards the end here now, we're running out of steam, breaking through the trend line. That one gets ignored. And then we're waiting on one of these bigger, longer term trend lines, which happens to have been from the absolute low all the way through these obvious points through here. We get the trade set up for our move back up again, and we can use the stochastic there as a way to get into the market. Now, if you're doing this on anything under a 4-hour chart, you're going to get hammered. So if you try and do it on a 5-minute chart, your account's going to evaporate faster than water and sunlight. So what you really need to make sure that you're doing is doing 4-hour charts and above. Really pick the clean trends. And one of the easiest places to start is something like the NASDAQ. The trend line is just oh so perfect to work with. And if we get rid of the stochastic for a second, let's just delete that. I mean, it literally jumps out off the page. 1, 2, we get our third touch, we get our move. We get the touch, we get the move. We get the touch, we get the move. I mean, this is textbook stuff. Amazing trend line trading. Go and look at the Dow, go and look at the S&P. Stock indices which trend to the upside. Love trend lines like this and are incredibly easy to trade. And you can just work off of those reversal candles. Comes back down, gives you the reversal, go for your 3-to-1. Comes back down, gives you the reversal, go for your 3-to-1. Comes back down, gives you the reversal, go for your 3-to-1. And it's like printing money on a longer time frame here, daily charts. That's it for this video. Hopefully you've learned something new as to how to draw trend lines, how to work with and how to trade trend lines. And again, make sure that you smash the like button and subscribe to the channel using the button below. Hit the little notification bell so that we can help you to become a better trader with regular videos just like this one.